Hello and welcome to ATFX's FOMC interest rate decision preview. Probably the biggest event of this week and always one of the major events and central bank events of the entire month. Looking at data, looking at the rhetoric and looking at the information we've got from the Fed, the market is fully pricing. I think we're now 98% priced in that we will get no change from the Federal Open Markets Committee. Because of this, I think we're going to see volatility off of the statement and then from the information we get from Jerome Powell in the press conference afterwards. So there will be potential for some very big moves in the market, and we'll be focusing on a few things. Obviously, we've got the Fed's twin mandates, that's jobs and inflation. Now, inflation has been coming down, but it still remains sticky. Keep an eye on those PCE index indicators and, of course, the CPI numbers. And jobs numbers, we've just come off the back of a strong non-farm payrolls print on Friday. The unemployment rate is starting to edge up, but it's not really having too much an effect that should really see rates move in the US. We're now looking at potential for the next rate cut, probably going to come in around July. 55% chance of a rate cut coming in July, with a 30-ish% coming in June. We've got some economists saying that we're going to have to see inflation coming down. We're going to have to see jobs market in a little bit of distress. One economist I was reading about earlier is pushed out as far as December. But as far as the market's concerned, at the moment, we're looking for the first rate cut in July and possibly two more before the end of the year. This is where we're going to get some exciting moves. Now, today here at ATFX, we're going to look at three major products that we see traded by most of our clients. So we'll have a look at gold, which will move and will move hard, and it has been. We saw 3% in gold overnight. We're going to have a look at euro, obviously the biggest trading currency we've got, and dollar yen, which has also been flying around. The other thing we're going to look for in the statement is any reference to trade concerns, any reference to President Trump's tariffs and how they feel that's going to affect the Fed moving forward. Without any further ado, I'll take us over to our charts where we can see these trade opportunities. So here's the daily gold chart, and as we all know, gold has been flying. We've seen all-time highs. I think we've seen about 24 all-time highs in this year alone, up 24% last year. I think we hit another 15 to 16% this year. It has dipped off, as we can see. Here's that all-time high. It dipped off at 3,500 and a tiny 0.5 in there. And that came on the potential for trade deals to come. So a lot of this has moved on the back of haven flows, but the dollar takes a big part of this equation as well. And you will see an instant move in gold on dollar perception. And as I said, a 3% move last night in gold. That took us up through, interesting enough, through this sort of resistance trend line that had built its way in. Not a particularly great one, but a good trade nevertheless. We'd then probably be moving this chart resistance level up to here. So initial resistance will sit here, 338,690. Obviously, strong resistance now at 3,500. If we are trading around these levels, if we do start to get a more dovish Fed, if they are showing deep concerns with President Trump's tariff, trade concerns, and a contracting US economy, expect to see gold really motor to the top side. It will charge higher and it will challenge this 3,500 level. If we see a more conservative Fed, if they feel that the inflation is okay at the moment, or if they hint at that it's a bit too sticky, expect to see the dollar accelerate, gold will drop back down. Initial support will be around these lows that we saw the other day, around 3,200, and then we're down to this trend line support here, just above 3,000, all the way down to this better and stronger trend line support, which is around 2,850. So that's gold. Expect to see percentage moves in gold after this FOMC announcement. Let's go and have a look at euro. Euro could be a very interesting move as well. So this is the euro chart. As we know, seen massive dollar depreciation since its highs in Q1. We've moved off those highs in euro. We're down from these just south of 116 levels. There you go, 115.73, trading around 113, but we could see some big moves. Once again, even though we don't expect to see a rate move today, this could be a crucial Fed meeting in how we get forward guidance from Jerome Powell. Now, once again, if we get a dovish hint from him, if we do get a further into, we will see rate hikes coming, and especially if it starts to move us along the curve towards June, expect to see euro accelerate to the top side to challenge that 116. A breakthrough here should see a relatively easy move back up to 120. Obviously, these are the longer term charts, takes a little bit longer. Once again, more hawkish, or in reality, less dovish. expect to see a move back to the downside. Initial support be on the 200-day moving average, currently at 107.81. And then you're looking all the way down here, just above 102, 102.20 there for support. So because of the big moves we've seen over the last couple of months, plenty of opportunity for big moves, especially after such a big risk event like the Fed. Let's take us on to our final pair today, dollar yen. Been moving all over the place. There we go. Charts just popped up. As we know, safe haven flows into yen, similar to gold, have dominated moves, but that dollar side of the equation cannot be ignored. Once again, if we see more dovish rhetoric, and obviously if we see a cut, I probably should have caveated this, that 2% could be right. A cut will take us straight down to challenge these lows. Trendline support's coming in around 140.23. I think that low there is just under 140. There you go, 139.86. That will be challenged, and it's a long way off, but we are seeing massive moves in dollar yen at the moment. Cut or dovishness to the downside. Obviously, if we come in less dovish, we start to see treasury yields move to the top side in the US. We will challenge first these highs that we've seen this month at 146, and then trendline resistance 147.16, and then that 200-day moving average is all the way up at 149. But do expect big moves on this market. So that's pretty much it for us today. Look for Fed's feelings on jobs. That's key. Fed's feelings on inflation. We kind of know where they're at the moment on that. But really the thing that's probably the most volatile is the US administration's trade policy, is the tariffs they're going to bring in. If that uncertainty increases, that's where we could see some big moves. So good luck with your trading. If you need anything from us at ATFX, please let us know.